Good morning. Welcome to another episode of the Pricing Committee. A couple of things happened at the weekend, and they send me, maybe other people, a very clear sign that we moved from the product game into another game, another form of tech game. If you think of technology as four major strategy games you're playing: monetization, which you could say Apple's playing now, to be honest, with the cloud, etc., and the storage and basically reproducing the same product just to make money. Then you have business model game, which you could say AWS played, Amazon play, in terms of ruthlessly getting costs down to such a low level you can make money. Distribution could be, as you say, Microsoft. And the kind of model players, Anthropic and GPT or OpenAI, were playing a product game. GPT versus Claude versus GPT. Month after month, they would come up with a new model and they would excite us with their product. And no one really cared about the price because we were excited by the product. But the two things that happened at the weekend, as I say, the Fable at the top end and then the purported price war at the lower end with Sam Altman putting rumors out there, tell you that we're no longer in the product game. And so we'll just have a look at both articles very briefly and then talk about what this actually means from a pricing committee perspective, that we've moved from one game into maybe one of the three other games and how these companies are going to use that kind of transition. There we are at the top end into one of these other three games. Let's just go over there pretty much every single newspaper online. But here the BBC is basically saying that post that shutdown, which apparently came from Andy Jassy, but I'm not quite sure, that's reportedly. Post that shutdown, obviously Anthropic want to get the model back up and running, but they're not going to be able to immediately. No way. The point is the FAFO, and they have done. But what it means for us, the pricing people, it means that actually the top end of the pricing has been determined. We know that no model is going to be able to come out that's going to be able to charge as much as Fable, which I think is $50 per output tokens, because we know that they're not going to allow any model to come out, which is as good as the Mythos or Fable, whatever they call it. And so therefore we know the top end of the value chain in terms of product quality has been reached, which means the top end of the pricing kind of ladder has been reached. Now let's just head over to the other article, which shows there may be a race for the bottom end. Let's just stop this and move over there now. And this is just one of the many articles that show that the rumors going out there, well, I'm sure OpenAI put the rumor out there that they're going to start a token price war. Now, this comes on the back of many arguments and discussions over the last month about the return on investment on AI, token spend in certain companies, 500 million here, Uber problems there, Microsoft switching basically off their Anthropic use. So this is telling us that now the market is starting to have a price vice. If I can say that with my list, a price vice. We know the top end, nothing is going to be able to be released basically above the Mythos Fable level. And at the bottom end, obviously, you really are bottom fishing with China, DeepSeek, etc. And you're also basically maybe having Sam Altman fight Dario for low-end prices for ones that are allowed in the US. So that says we're in a world of pain if we're one of those model providers. But for the ordinary user and for pricing committees, it's actually not a bad thing. And we'll just come on to why it's not a bad thing when we look at the last kind of insert from, I think it's called Artificial Intelligence, a really good data platform that gives you like cost per intelligence, etc. Let's just head over there now. So here's a chart from Artificial Analysis is the name of the website. Fantastic website, so check it out. And here you can see the full range of basically from GPT, one of the older models, but more relevantly DeepSeek. Let's take DeepSeek V4, which shows output tokens at pretty much less than $1 versus what was being charged while Fable was alive for 48 hours, maybe 3 days, at $50. So much as 50, perhaps even 55x the cost. And so what this was a problem It's a lot of was a problem for anybody in the pricing field, because essentially it meant that you had a massive discrepancy between kind of a low-end-ish model, which is still capable or performant, and a really, really top model. And so what it meant is that you couldn't actually really easily predict what your input costs were going to be, because they were wildly swinging between massive top end for certain tasks and obviously bottom end for some basic tasks. So you could have a blended rate, but you struggled because obviously the dispersion is just massive from 50 down to, say, $1. But what it means is if you now basically don't have that Fable model and you have something, say, like 4.8, yeah, you're at a kind of 25 to 28x differential. Still huge, don't get me wrong, but not as bad. And then you go down or 2 notches, you might only have like a 10x differential. So your blended rate is going to be much, much better than it ever was with obviously the top end. And it also means your cost control obviously will be a lot better, your forecasting will be better, and therefore you'll be able to have a predictable input for you to be able to create predictable outputs in terms of value pricing, as it were, or what you want to price per event or per outcome, etc. So let's just switch out of this and just finish off the conversation with a conclusion. So what this means is, whilst it's bad news for the providers, these model providers, Anthropic and OpenAI, it's actually good news for the general user, i.e. us, and also for companies that want to have their input prices at least either going down or known. And so a price war will drag all the prices down, for one, generally. And secondly, the closure of or suspension of Fable Mythos will suppress the diversity is the wrong word, the dispersion between top end at $50 and kind of medium low end at, say, the DeepSeek V4. And so now, for moving from a kind of 50x spread, 50x plus spread, you're probably going to be down to a dispersion of about 10x. And that means you're much more likely to be able to hit a reliable output price for your product, which means generally your pricing will be better because you won't be changing it every month for your clients and trying to justify new value every single month. So all in all, bad news for the model providers, both for Anthropic and for OpenAI if they're starting a price war, but actually good news from a dispersion perspective for anybody who needs the input of AI tokens and wants to manage less of a crazy dispersion between 1 and 50x in terms of input cost. So that's the pod for the day. And sometimes the price war isn't bad, but a price war plus some sort of regulatory suspension at the top end can only ever be good for a pricing market or someone on a pricing committee. So that's the pod for the day. Bye-bye.
The pricing committee, velvet rope cartel, turning every checkout into Dante's seventh hell. Can we simplify? Gets treated like a crime, cause complexity looks smart when you present it in a slide. Every metric looking healthy till the profit disappear, like magic trick performed by venture capitalists of the year. Net retention floating high like a helium parade till the AWS invoice enters with a switchblade.